Hi, everybody. My name is David Tetrault, and my presentation is called The Digital Frontier of Accounting from Historical Reporting to Predictive Intelligence. I'm going to move through these slides. We're going to talk about them. One of the things that stood out to me throughout this project and this course is how directly these topics connect to the industry that I work in, which is banking. So in banking, we constantly rely on organized data, forecasting, automation, and risk modeling to make decisions. So as I worked through this project, it became very clear to me that accounting is also going through a lot of the same transformation, which is what made it seem like a frontier in that sense. So yeah, let's get into it then. Um, the first slide I called accounting's evolutionary journey, because it's no longer about recording transactions and explaining what already happened in the past. It's moving from manual processes to automated ones, and from historical reporting to forward-looking insights. What stands out to me is that this mirrors, again, what has already happened in banking. In my world, we don't just look backwards at the past or at the financial statements or activity, but we use the data to assess risk, anticipate outcomes, support decisions before problems happen. Um, it's what makes this shift so significant. It's an evolution. So the profession itself is becoming more strategic because better data and better tools just allow accountants to contribute insights and not just documentation. So that's why I kind of used some of these bullets here to describe that, because we're talking about data-driven decision making. We're talking about AI analytics, which makes the role larger. It expands the role. Um, so moving forward, there are certain technologies that are driving the change. Data organization, predictive analytics, and artificial intelligence are all game changers. The takeaway is that these are not all separate ideas either. They build on each other. First, data has to be organized correctly. If it's unreliable, if it's hard to get to, the analysis will be clunky and unreliable as well. So, second, predictive analytics uses that organized data to search for patterns and forecast future outcomes. And AI just kind of builds on both of those things by automating these tasks, detecting the anomalies, supporting decision making at scale. That progression makes sense to me from a banking perspective because it is very similar to how we think about credit operations and portfolio management. Bad inputs can lead to bad decisions and bad outcomes. Good inputs create the foundation for stronger forecasting and smarter actions. So those are the technologies that are driving this evolution. So if we get into an audit organization, right? Data being organized, data organization is what makes modern audit work possible. Centralized, standardized, and integrated data allows auditors to evaluate transactions more efficiently and more completely. What I find meaningful here in this slide is the move away from, just isolated testing and more towards broader visibility. In banking, that idea is very familiar. We don't want to assess risk using fragmented information. We want a full picture. The same is true in audit. When financial and operational data are connected, auditors can help better understand what's happening behind the numbers. So to me, this is one of the clearest examples of accounting becoming more intelligent. Better organized data does not just save time, it improves the quality of the professional judgment and thus the audit. So uh, moving forward, the predictive analytics side of auditing, it just makes it more proactive by helping auditors focus on areas of higher risk. Instead of treating every transaction the same, firms can use models to identify anomalies, unusual trends, and possible indicators of fraud. And really, this stands out a lot to me as a banker, just because of how prevalent fraud is on a daily basis in the banking world, in both portfolio management and the lending side and the deposit sides. Um, we already think like this: risk segmentation, exceptions, early warning indicators, anomalies, outliers, um, because that's how fraud is detected within uh, a bank, and more specifically within client transaction histories and their personal, very sensitive information. So, predictive analytics, from an audit perspective, it's a part of this broader move towards using data to direct human attention where it matters most, which is the real value. So predictive analytics doesn't replace the judgment; it just sharpens and focuses it. So moving forward, so AI applications, right? AI takes all of this further by automating audit procedures, recognizing these patterns in large data sets quickly, and improving fraud detection. What I think is especially important is the scale. A person can only do so much. They only have so much brain power per day, but AI can process large populations of transactions fast. In banking, that kind of scale really matters in areas like fraud monitoring, transaction review, and compliance surveillance. So it makes perfect sense that audit is heading in that same direction. Biggest takeaway for me is that AI just strengthens the auditor's role rather than weakening it. The real benefit is not that the machine itself is doing the thinking; it's that the machine handles the repetitive review work, which allows the professional to spend more time interpreting that risk and asking better questions. So from and a lot of these themes throughout each of these buckets are very similar, right? So in a tax scenario, data organization is critical, right? Because companies often have to manage compliance across their multiple jurisdictions and changing requirements. Centralized tax data and standardized procedures help, I would say, improve consistency, reducing duplication, and making compliance easier to manage. This connects strongly for me in banking, just because banking operates in a very, very heavily regulated environment. So I'm used to the idea that poor data quality creates downstream compliance risk. Whether the issue is tax reporting, regulatory reporting, or customer information, the principle itself is the same. If the data is messy, the risk goes up. So to me, organized tax data is not just an efficiency thing; it's a control mechanism. It supports accuracy, transparency, and accountability, so that people don't have to pay extra taxes. You know, I mean, I know it's a very watered down thing to say, but still, that's how I kind of look at it. So again, predictive analytics. So these themes are very similar. Predictive analytics helps tax functions become more strategic by forecasting future liabilities, modeling scenarios, and evaluating how future business decisions may affect tax outcomes. And I'll tell you, as a banker, those have very real, like, the different moves that people can make have very real tax implications sometimes. And so what I appreciate about this is that it reflects a shift from reaction to planning ahead. Forecasting is very central to how we think about performance, balance sheet management, and risk in commercial banking. So when tax uses predictive modeling to evaluate alternatives before decisions are made, um, that feels like a very natural thing. The synthesis, in my view, is that tax is no longer just about preparing returns correctly. It's increasingly about helping the client or the organization make smarter choices in advance, um, which is a much more strategic role. So, um, moving on, the AI conversations, again, very, very similar. Um, AI is changing tax research and compliance itself by helping professionals process complex rules faster, validate information faster, and monitor compliance more completely and continuously. One thing that really stood out to me in the research is that tax authorities themselves are becoming more data driven and technologically sophisticated, right? That matters because organizations are no longer operating in an environment where slower manual processes are enough, right? It's another way that it feels familiar to me because regulatory bodies and institutions alike are using more automation with more data and more continuous monitoring to ensure compliance. So from my perspective, AI in the tax world is not just about speed; it's about keeping pace with a changing world where scrutiny is becoming more real time, more digital, smarter, and more exact. So it's really important to stay on the good side, Uncle Sam. I'll tell you that right now, just from working with borrowers over the last 17 years. Um, so from a managerial lens, again, you know, organized internal data supports planning, control, and day-to-day decision making. It brings together cost data, production metrics, and operations information, so managers can respond to to things more effectively. This is probably one of the areas I feel that is most relatable to me professionally, because in banking, strong decision making depends on having visibility into the forces, the drivers behind a company's performance, not just the results itself. That could mean production, pricing, pipeline, portfolio trends, efficiency metrics. Managerial accounting works, I feel like, the same way. It helps leaders understand what is driving the outcomes inside the business. The key idea here is that organized internal data makes management more intentional. It gives leaders something better than just instincts alone. So that's why I kind of put these bullets here, just to sort of list out those different things. But yeah, moving forward, predictive analytics. And again, I kept thinking, are my slides too similar? Because the fundamentals are the same. Predictive analytics improves managerial accounting by strengthening the budgeting, the demand planning, the cost analysis, and the scenario modeling. It resonates because forecasting is such a normal part of how a bank operates. Constantly trying to estimate future performance, allocate capital and resources, and plan around changing economic conditions. So the use of predictive analytics in managerial accounting it does not feel like a brand new concept, but it feels more like a part of the broader shift towards intelligent, proactive management. What makes it powerful, I think, is that it helps managers act earlier instead of waiting until the results come in. And so instead of reacting, they can model these outcomes ahead of time and make better informed decisions as they happen. So, which again is the same for AI applications. It's another layer, automating reporting, identifying the inefficiencies, generating recommendations that support better operational decisions. What I love here is the move from predictive to prescriptive thinking. And what I mean by that is it's one thing to know what is likely going to happen, but it's another to have systems in place that can help recommend what action should be taken. That's a major advancement that I think AI brings to the managerial accounting perspective. Because from banking, it connects to how institutions, are increasingly using technology like this, not just to measure performance, but to improve it. Um, so in accounting, I would think AI is not just making reporting faster, it's helping organizations become more disciplined, responsive, and just being better in how they operate. And I think that's solid, a really great thing. Um, and finally, we get to the financial accounting bucket. In financial accounting, data organization uh, improves the speed, the consistency, and the reliability of reporting. Real-time data feeds, cloud systems, right, and automated reconciliations, they allow organizations to produce more accurate information with less delay. I think that's great. It's another area where I think the connection to banking feels very, very direct. In a financial institution, timing and accuracy, they matter, especially to the client. Better better visibility into financial information not doesn't just support reporting, but it aids decision making, planning, risk management. I mean, so when I look at financial accounting becoming more of a real time and automated process, I see it as part of this larger trend towards immediacy and control. To me, this reflects a shift away from accounting as just periodic financial statements and activities, but more as an ongoing source of operational intelligence. So love that. Um, I smushed these two together just because I wanted to, because I think they go hand in hand. Predictive analytics and AI both help financial accounting because uh, becoming more forward looking through earnings forecasting, cash flow modeling, trend analysis, anomaly detection, and valuation support. These are all huge. What I think is most important here is that financial accounting is becoming more useful for decision making, not just compliance. In banking, cash flow, trend analysis, early warning indicators are essential in assessing the health of a borrower or a business relationship. I naturally see value in applying similar predictive tools and artificial intelligence into the reporting side itself. My takeaway is that financial accounting is becoming more dynamic. It's no longer limited to summarizing the past. It's increasingly helping organizations interpret the present and prepare for the future. So all in all, this is a fun project. I think the research shows that accounting is moving from historical reporting towards predictive intelligence, from manual work towards automation, and from being a compliance centered function towards a more strategic, essential partner. What stood out to me the most in this project is how consistent that shift already is in banking, because that's what I do for a living. So um, it was kind of like realizing the same forces are at work. Uh, the better the data, the stronger the forecasting, the faster risk is detected, and the more intelligent these decision supports are, the better. That's why this topic did not feel like theoretical to me. It felt practical. So my overall synthesis is that these technologies are not diminishing the importance of accountants. They are increasing the value of accountants who can interpret data, understand business context, and use technology to support better decisions. In that sense, the future of accounting looks a lot like the broader future of business itself, real time, data driven, and strategically integrated. Um, and then, of course, we've got the references here. And I hope you enjoyed the presentation. Have a great day.